So a few days ago, I did a video about how to scale into trades, where to place your entries, how to add more to your positions over time. And that's one thing. But the other struggle people will have eventually is how do you get out of trades? How do you scale out? What's up, traders? Welcome back once again to the island of Koh Samui in Thailand. I'm here since a few days now. I'm leaving tomorrow. And so today I want to do a video with 3 ways you can scale out of your trades that are simple yet powerful. And these will help you to get out at the right time on your trades and maximize your return on those trades. As always, I will show you some examples on the chart to be able to understand this more clearly. Let's get on with the first one. The first one is quite simple. So you simply get out of your trade, at least a part of it, when you get an opposite signal. So for example, for me, I trade the Benjamin reversal. When I have this setup opposite to my trade, like let's say it's a bullish trade, I get this bearish setup, then I get out of the trade. That works really well. For reference, this is example number 1 on the scale out video. So let's look at an example of scaling out based on opposite signals on the chart. What I like to trade is the Benjamin reversal. So what we do is we have one setup over here where we have price breaking out to the Benjamin. Let's put the Benjamin on the chart on a 4 hour. Price breaks the Benjamin, makes an engulfing candle, and then we will enter here above the high. Let's just do this quickly over here. And let's say that our typical rule is to exit the trade or at least scale out on a 1-to-1 and 3-to-1 basis. Let's just say we aim for 3-to-1. Okay. Now, what we would do in this case is not do that. We'll aim for actually an opposite signal. So wait for price to make an opposite signal, which we'll see with the triangle. We're looking for like a red triangle like this over here to get us exit at least part of the trade minimally. So we'll let price go. Price goes up, comes back down. We're almost tapped out. Not quite yet because we put the stop loss a little bit below. Price goes in direction again, came back down. Okay, goes up, and then here we have an opposite signal. So the same setup we had before, the exact same thing, but opposite. So price didn't actually trigger this one, but we have the signal anyway, so we could exit the trade after the signal, which is around here. So that gives us a pretty decent trade on that pair. Now, I wouldn't exit all of it here. We could exit only part of it at this opposite signal trade, and this will give us roughly a 1.75 R on that trade. Okay, so it's good because we look at the market to tell us when to exit the trade based on the opposite setup, which happened quite a lot in that strategy. It might not fit for all strategies, but this one works really well. And then price goes up even higher, which could be where we exit the other half of the trade. Fixed reward to risk or something different. But that compared to a 1-to-1 reward to risk, which is our main one with the core strategy I have, it's quite better. So that's how we use an opposite signal to scale out of a trade. The second method, if you see that you are missing a lot of big moves in the market, or maybe you scale out of trades but you scale out too late, it is to simply get out at least part of your position based on a big move. So whenever a big move happens in the market, you get out or you reduce your size. And that can make it that you catch the big move. Now, this is kind of like a little bit discretionary in the sense that you cannot always know when the big move is and what the big move really is, but it works quite well. For reference, this is example number 2. Now, let's say we take the same example we had before of this signal here with the Benjamin reversal setup. And what if we look at, for example, a big move? We would basically look for a big kind of home run to exit the trade or at least close part of it. And that we could look at price action. We could use indicators too. We could put, let's say, the ATR on the chart. That could be helping us to figure out how much price typically move versus how price moves now. And then we'll look at exiting when we have a big move or just a Benjamin. So what if we look at when price hits the top of the Benjamin, right? So we entered at the low of the Benjamin. Now we look at the top to exit or to exit at least part of it, scale out of the trade a little bit. So here you see price, and 2 ways we can do that. So we enter here on the market. This is a bullish candlestick. Then we have another bullish candlestick after that. Here's the neutral candlestick. Bullish, 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 bullish again, and decision candlestick. Bullish but big wick. We could exit here, right? That's a perfect signal based on price action because we had all bullish, small decision, and then big wick. So more decision, which means we can exit the market there. So let's just say we exit like half at this point. when this candlestick close. That's pretty decent. Or the other thing we can do is we can exit when price hits the Bollinger Band, top one, right here, exit the market there. Or actually it would be like more around here. Okay, exit the market there. And that gives us a fairly similar exit to what we had the first time. See, the first time we went out on opposite signals, so we exited the market at this level. Okay, now we're almost at the same level. So that's decent, that's pretty good. We should just like a little bit below, so around 50 pip lower, which is quite good. It's pretty decent on this trade. So not gonna be able to do it. And that's kind of discretionary a little bit, so you have to decide either if you look at price action or if you look at Bollinger Band, you should decide this first before you jump into trades. Make your exit plan first, and then you can exit with big runs if you want. The third method to scale out of your trade is with fixed reward to risk. That's the one I use myself. It's just easier to manage. There's nothing to kind of look at. It's just a fixed number that you always look for. Works out well, and that's the one I use the most. For reference example number 3, fixed reward to risk. Now, this is the way that I use the most to exit trades in the market. It's quite simple. It's maybe the easiest one to implement, and it works quite well because it's based on numbers. Here we have a breakout trade. So we have this range in the market that we look to break out of and trade that breakout of the range. So here it will be looking like this, a little bit lower, and we look for price to break out of this range simply. So price breaks here, it's effect breakouts, we come back inside, but it's still a valid trade. So we look for a price to close below the low, which was over here. This is a big wick, which we don't consider much. So we'll look for price, this concept here will be the one breaking out of the range. So the way we would trade this, we would put our entry below the low, right there. Stop loss here above the candlestick breakout of the range. And then what we do is we have fixed reward to risk. We look for example, in my case, 1-to-1 and 3-to-1. So let's just say we do that. Put a short. There we go. And now our first take profit is going to be at 1-to-1, which we can measure here. Will be around there. That is 1-to-1. And our second take profit will be at 3-to-1, which here seems like it would not be triggered on this particular trade. We almost got there, but not quite. So I prefer to be honest with that. And that's what will happen on many trades if you do that, in the sense that one will be triggered, the other one won't, but that's still fine. What if we do like a 1-to-1 and 2-to-1? We could do that too. I used to do it that way, with a take profit at 1-to-1 and 2-to-1. You want to decide these numbers before you go in trades, not after, of course. So that's what I would usually do. I would do 1-to-1, 2-to-1 first, then I move to 3-to-1 because it was more profitable overall. But here for the example, let's just say we do 2-to-1. And I'll be here. And so when price gets here, we exit half the trade, here the other half. And that's it. There's no thing to look at in the market. You don't have to look at chart at all. Just put these first before, when you place your trades. And then you're good to go after. Nothing to do after that, which is good. It gives you a lot of free time, which is perfect. So that's how you would do with fixed reward to risk to scale out of trades. I said I would give you 3 ways to scale out of trades, but I have a 4th one that I don't use myself, but I know works well for some people. And that is to use Fib retracement. And that is to use Fibonacci levels. So you would look for these Fibonacci level to exit your trades. Also, discussion here a little bit, but works out quite well. For reference, this is number 4, Fib levels. Now here's a way that is a little bit more advanced for most people, and I would not recommend it. I'm just showing it because some people might like it. And if that's you, then good. But I would not recommend that for most people. It's just like an extra way that you can use. And that is with Fib levels. So we have a trade here with the Bollinger Band, the same thing we had before. We enter here above the engulfing candle. And in that case, the exit, we would scale out of that trade. And we would use Fib levels. So Fib level, you do it here, trading view. Now you need to draw from the top of the move all the way to the bottom, which is here. Now the way you do this could be varying, and that's where it gets kind of tricky. So you could either do it that way, or you could use the top here, which you had before, or you could use, I guess, the top here, and that really varies on your result. So let's just say that we make it with this top over here, because we consider the whole move as a big move in the market. And now we would basically exit that trade based on retracement to that move. And that means that we would be looking at price coming back to the Fib levels. And some people believe that when price comes back, especially this one level here, 61.8, that the price might reverse. It's very likely that the price will reverse. So we could scale out maybe at the 50%, and maybe the other one like the 61.8 level. So you would take half of the trade, let's say here at 50, and then the other half here if you wish. Okay, it works out well in that case. Again, I'm not sure how that works most of the time, but it's a good way to do it if you want to exit your trades, especially if you trade trends. This is not going to work well in most of the sellers market, but when you have a big trend, then that could be a way to do it. Now, the other way you could do this as well is through if you are trading in a trend with extensions. Now, this will be hard to notice, but let's say we find a way to enter the market at this level after the single thin candle. What we'll do is we'll look at the pullback we had on that pair and look to extend this with the Fibonacci extension tool. So you go here, you take the Fibonacci extension, this one, and you just go backward from here, then here at the top, and then drag it back down again. So the retracement are here, and then these are the extensions. So let me just see if it's placed properly. This goes a little bit lower. There we go. And basically, we look to exit at this extension in the trend. So you'll see that price here almost went back down at the 3.618. So that could be a way to exit your trade as well. Again, you got to look at this new result and what that means. I'm not saying you should do this, and definitely study this more if you want to do it that way. Not the method I use, but you could do it if you want. So that is how to do it with Fibonacci. And I invite you to think about the fact that there's no best method here. You pick the one you prefer, and you go with that. So there you go, guys. Those were the 3 ways plus 1 extra way to scale out of your trades. How this was useful, let me know your thoughts in the comment below as always. Let me know which method you use or which method you want to use in the future. I would love to hear that. And here are a few comments from past due. I appreciate your comment as always in the comment section. And I'll catch you back here in Koh Samui or somewhere else pretty soon. Ciao.